In today's Property Insider Chat, Dr. Andrew Wilson and I discuss the latest My Housing Market report for the end of January 2024, and not surprisingly, house prices were steady over the last month. But that is a factor of, at the end of last year, things started to slow down and everyone seems to take a holiday over January. Having said that, it's interesting to dig down and see how divergent our various markets are, and we'll discuss that in a moment. But before we do, if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you updated each time a new show comes out. Australians have a national sport, and it's not played in the field or on the tennis court. It's actually called property talk, whether it's dissecting the latest market movements or bemoaning the uphill battle to break into the housing market. It's been a hot topic at backyard barbecues over the holiday season, hasn't it? And the media's been filling us with lots of forecasts for our housing markets, for interest rates, inflation, and the economy, as it always does, especially at this time of the year. But what's actually happening on the ground in our housing markets? That's what I want to find out today from Australia's leading independent housing economist, Dr. Andrew Wilson, as he shares his end-of-the-month housing market report from My Housing Market. Hi, Andrew.
Yes, good day, Michael. And are we surprised that the clickbaiters are up and about again? Beginning of the year, a bit of a quiet time for the media anyway. Of course, we're distracted with holidays. I'm not sure, well, I know we're not having the same outrageous headlines we had a year ago in regard to house price crashes. I'd be pretty embarrassed if I was the media, having promoted so vociferously those headlines a year ago and knowing that we turned out a very strong year for house price growth almost across the board, certainly in the major capital city markets. But yes, we've released our first house price report and unit price report for the year. Of course, My Housing Market first with the latest in terms of house price reports. And no surprise, of course, we are looking at the January quarter. That's the 3 months to January, even though our methodology does tend to moderate seasonal effects. There's no doubt that seasonal effects have some impact when we do look at that 3 months to January, which includes, of course, December and January, which are holiday months. We compare that to the 3 months to December. But nonetheless, I do think the results are still quite robust in terms of what's being revealed in terms of underlying market energy. And it does follow what we saw, the pattern and the trend. And the My Housing Market methodology is very stable, and it does create that sense of what the underlying trend is. So let's have a look at what the results were, Michael. The national result over the 3 months to January versus the 3 months to December. So it's a rolling median price model. So national house prices, and of course, that's a weighted average based on volume. So of course, the big capitals, Sydney, Melbourne and Brisbane, really contribute in the main to that national price. But nonetheless, prices were flat, and that followed 11 consecutive rolling quarters of growth, Michael. So each month we take the quarterly growth rate and then move it on to the next month. So we had 11 consecutive rises starting in February last year and ending in December. Perhaps no coincidence that the January number last year was a little lower. But when we look at the annual result, that gives us a better picture, taking out the seasonal effects. We can see national house prices are up by 8.6%, Michael, over the past year. So,
Andrew, despite rising interest rates, despite political issues, despite wars overseas, I guess it's a factor of the robustness of our markets, but also the shortage of supply at a time of very strong demand from our increasing population.
Yeah, and despite outrageous predictions of house price crashes, which did have an early impact on the market, but all that did was it created pent-up demand, and then the market was up and running again, and making those forecasters look pretty foolish again. We've come through with nearly double-figure prices growth nationally, certainly double-figure prices growth in all of the major capital cities except for Melbourne. As you said, Michael, in the face of what did we have? 13 increases in official interest rates. So higher interest rates, lower house prices? I don't think so, Michael. I think it's all about context and the nature of the cycle going forward. And again, that's disproved a lot of the clickbaiters again, and a lot of those self-appointed experts in the property market. But this year will be different. We've discussed that. And as I mentioned, the trends, particularly Sydney and Melbourne, have started to ease over the last few months of 2023. And this is just sort of continuing that trend, Michael. Sydney median house prices down by 0.4% over the 3 months to January versus November. Melbourne down 0.2%. But Brisbane just keeps on keeping on, Michael, up by 0.9%. And Perth, again, the top performer with house prices up 1.1%. So any seasonal impact was certainly absorbed in the Brisbane and Perth markets that have been really outstanding over the past year. And you can see there, the Perth house prices, Michael, are now 17% higher than where they were a year ago, with Brisbane house prices up by 13.9% over the past year. So that drive, particularly in Brisbane, that drive that came out of COVID with all that interstate migration heading into southeast Queensland, has certainly dissipated, with the data telling us that that net migration number is lower, but it hasn't stopped house prices growing in Brisbane. The trend is mostly downwards over January in most of the capital city markets.
What about the apartment market, Andrew? Because as houses became less affordable, more people were looking at other alternative accommodation.
Yeah, it's interesting, Michael. 2023 was certainly a positive year generally for house price growth. Not quite as strong for unit price growth. Although units did grow, they certainly didn't have that double figure or near double figure result. It was around 5 to 6%. I think that the interesting thing is when we look back to 2022, and can we do that? Is that not too far? We saw that units actually outperformed houses. So it was a little bit of a catch up, as you said, from that switch across to units into houses. And I think that's continued to some degree coming into this year, where unit prices were actually lower by 0.7% over the quarter, the December quarter versus the previous quarter. And certainly the big markets of Melbourne and Sydney were down. Melbourne down 1.6% over the quarter. Again, I point out to the likely seasonal effects in the bigger markets here. And Melbourne and Sydney make up the bulk of the weighted average for the national unit price. But again, pointing to Brisbane, Michael, Brisbane unit prices up by 2.4% over the January quarter, which again is reflecting the strength of house price growth in Brisbane, similarly in units. And when we look at the annual results for unit price growth, Brisbane unit prices, Michael, are up by 14.8% over the past year. Again, it makes a nonsense of a lot of those headlines of previous years about the Brisbane city market being oversupplied because of the apartment building boom that occurred there. And Brisbane has a significant apartment market. The smaller markets of Adelaide and Perth, although they recorded strong growth over the year as well. So yeah, a little bit weaker there, courtesy of Melbourne and Sydney's influence over the January quarter for the national unit price. But certainly, again, some standouts, particularly that Brisbane market, which surged by 2.4% over the quarter. But Melbourne and Sydney down going forward. So perhaps a predictable start to the year in a sense, with a flattish prices growth for houses and lower unit price growth. But it is consolidating the trends we saw last year. And of course, Michael, the auction market will begin now within the next week. So we'll start to see the market refocusing and back into its stride over coming weeks, and be interesting in terms of the results that we get. But nonetheless, I think the outlook beginning 2024 is a lot more positive and a lot more optimistic than it was a year ago.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of this new property cycle. If you think about it, the opportunity like this to get set at the beginning of a new property cycle doesn't happen very often. So why not have an obligation-free chat with my team at Metropole to discuss your goals and to discuss your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through property. We're big enough to tip the scales in your favour, but still small enough to care. And as we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, it's not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, looking at those figures, Andrew, a couple of things stand out to me. First of all, we talked about the Sydney market or the Brisbane market, and there isn't one. So it's very easy to outperform the averages by understanding the granular markets and seeing what's going on. But I think the other lesson is in the boom we had post-COVID of 2020 and 2021, every property went up in value. You could buy in secondary locations, you could buy on main roads, you could buy almost anything and it would go up. Now we've got to be much more careful because the markets are being selective, buyers are being selective, and if you want to outperform the averages, you've got to dig deep and understand what's happening on the ground, Andrew.
Yeah, and the seasonal impacts that we discussed, Michael, relate to the fact that volumes are much lower in January and December because of the holiday impact. And we particularly don't see the proportion of higher priced and middle priced properties on the market. So that obviously has a downward impact on price models. So that's once we do get back into the year in full, we start seeing a more reliable mix of property types, that is higher priced properties come back into the market as the holiday season retreats. And we start to see higher prices as a result. But the dynamic certainly still remains in favour of sellers, I think, in the marketplace, Michael. But we've shifted through the catch-up market, which was last year, catching up to the declines of 2022. And now we're hopeful that we'll see a much more, with the cycle flattening, a much more stable and reliable outcome. We say that, I guess, when we do get to this position in the cycle, that we've passed all the disruptions. They take a couple of years to work through the cycle. So hopefully now we have that much steadier outlook, but there always seems to be something that comes out of left field, doesn't there?
Well, that's where the risks are, all the things that you haven't been able to think about once you've covered everything you think about. So look forward to catching up with you each week as we discuss in our weekly Property Insider chats all these outside factors. When we come back next week, there's going to be latest CPI figures come through, which I guess the Reserve Bank's going to be paying attention to.
Yeah, and I think also we'll have the first auction results, even though numbers will be smallish. It'll give us our first sense of how the market's beginning 2024.
Great. Catch up with you next week, Andrew. Thank you.
Thank you, Michael.